Hello friends and welcome to my channel Simply Stocks, and today I'm going to talk about TVS Motors, one of the marquee stocks of the stock market that remained from 2014 to 17 and did extremely well. So let's understand how is the stock doing currently and whether you should invest in the stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about TVS Motors, here's a small request that kindly support me on Patreon, and I'll definitely help you with any queries that you have. Will not help you with personal portfolio as it is written here, but I'll help you with definite one-line queries on any stock. The Patreon membership starts with $2 and goes up to $10 a month. In $10 a month, you'll be able to get a lot of benefits from next month, including my portfolio. You'll be able to view my portfolio as well as watch list. Once I have more than 200 patrons on Patreon, I'll definitely try to start with an education course on YouTube. And of course, that once you join there, you'll get a lot of benefits plus exclusive articles that I publish on Patreon that doesn't come on YouTube at the moment. Now about TVS Motors. The company was established in 1978 and they provide two-wheeler vehicles, and especially their TVS Jupiter and other products are very famous, and a lot of their scooties have sold across north, south and all over India. One of the top brand in this segment, and products include, as I said, motorcycles, mopeds, scooters, scooties, and other three-wheelers vehicles. The market cap of the company is around 15,000, 16,000 crore at the moment, and this has come down from a level which was closer to 30,000 crore or just over that. If you look at the financials of the company, and this is December FY20 numbers, the sales were down about 8% and the profit was down around 20.5%, which is quite understandable, and it is not surprising because all of the auto industry is going through a recessionary period. I have said that many times that auto industry itself go through a 10-year cycle in which 3 years are extremely bad, 6-7 years are very good, and this is in the middle of that 3-year cycle started in mid 2019 and could go to end of 2021, early 22. So this phase might continue, and because of the current pandemic, that whatever is taking place, we could be in a situation where we could be facing a lot of headwinds in terms of automobiles, automotives and other industrial you can say businesses. So this may continue further. The PAT dropped by around 21%. The debt has increased, so the long-term debt has increased from year on year. Although there is high promoter holding, institutional holding, but since the business is in an industry which is struggling at the moment, it doesn't look that good that the business would recover anytime very soon, say in the next 3 to 6 months. But it looks like probably after 2 years or so, things will automatically, things will go fine after a year and a half time frame, because the market itself will be buoyant with demand later on. This situation will not continue forever, whatever we are seeing, and the drop in demand is absolutely unprecedented. It was never witnessed earlier. The return on equity is around 21.5% and operating profit margin is around 8%. So the performance of the stock is at a 5-year low at the moment. It really surged a lot from 2013 August till 2017, and we seen that surge from around 25-30 rupees. The stock went up to all the way to 500 odd rupees. That has become a 17-18 bagger in that period, and then it has retraced back or lost 50% from the top, but 270, 260, around 240 to 260 levels was where it was hovering just a couple of weeks back. It has recovered to over 300 rupees. The return ratios are mediocre and numbers have declined over the years, but it is not to say that the company is going to go downhill even from here. But we could see another 3-4 quarters of very bad period, but this is not going to be a company that is going to just vanish from the market or something like that. So keep that in mind. Numbers should shrink further over the next 2 quarters. There's no doubt about it. And if the numbers do not shrink, then there could be doubt over the numbers itself, because the kind of sales that we are seeing across the board in autos, whether it is four-wheelers, two-wheelers, three-wheelers, heavy commercial vehicles, anything you name it, they are down something like between 50-60% to 90%. So there is a certainty that the numbers will be bad for till at least till the September quarter. So the June and September quarter could be extremely bad, but valuations will become even better after that. So another 6 months would pass by, maybe you'll see the stock at 250 260. Also those will be decent valuations. The dividend payout is also fine, not that great compared to other auto companies, but still it is relatively okay. If you look at the technicals of the stock, there is strong support at between 250 to 280 levels, more or less. So and the stock bounced back from those levels. So 245, 255 was a level from which the stock really bounced back. Stock is in strong downtrend, and we are seeing these pop-up rallies from 250 to 60 levels all the way to 320, 330, and all these are probably, if you are into the market or into the stock for the next 6-8 months, all these rallies are there for you to sell. But if you want to invest into TVS Motors for over the next 3 to 5 years, then these rallies are not to sell, but any declines would be opportunities to buy. So it may fall to 275 very quickly again if the market reverses. The long term support or stop loss could be at 250. So if you buy at 300, keep a 250 rupee stop loss and then see where it goes. There is a possibility that we may see another sharp fall in all the sectors, and of course something in the auto sector which is in tremendous pain, especially after the lockdown that has taken place here in India. So what needs to be done? In my opinion, you can buy on major declines, and do not buy at the moment at 320, 330. If I were you, I would go ahead and buy, and I'm not saying for you, but and this is not a recommendation in itself, but if I were you, I would go ahead and buy at 260, 270, 280 levels, wait for those levels and just accumulate over the next 6 months in that region. If it goes up, then it's well and good, you'll be in profit. If it comes down very sharply to these 280, 300 type range, so between 250 to 300, you go ahead and accumulate in that you can say region, and have a good 6-7 year, at least a 6 year time frame, and you'll get the rally of the auto industry in it. And once the rally start, just stick to your guns and just stick with your stocks and just see where it goes. It could really be pretty good from here, because the valuations have really come down all across the board in the auto industry. So it can give consistent returns once economy recovery takes place, once the sector recovers, the export starts, everything goes normal, and people have money to buy auto, except buying anything which is essential. So they'll go ahead and buy autos, whether it is two-wheelers or four-wheelers. So TVS would be considered there. So all in all, if you have a long-term time horizon, and by long term I mean 5 years or plus 5 years in autos, these are very good levels to accumulate as an SIP across the board in autos over the next 6 to 8 months, and just sit tight on it. So have less than 5% exposure into such stocks, but this is not a time to just sell autos. This is a time to accumulate autos over a period of next 6-8 months. So this was a video on TVS Motors. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it, and kindly check out my Patreon website. Thanks a lot for watching.